The problem with the phrase duck and cover is that while it may be sensible survival advice, it doesn't particularly help investors. Nor, increasingly, does the phrase short-term Forex outlook. Last Friday, the Japanese Prime Minister's office published an online document that was, depending on your read on the world's most opaque regime, either bone-chilling or over-egged. The illustrated three-pager provided advice in the event of a ballistic missile attack, a threat now routinely shoehorned into broker research as a tail risk event and perceived to have risen sharply as pugnacious rhetoric has crackled between the US and North Korea. In keeping with recent tradition, the safe haven yen has strengthened steadily since mid-March as the language on Korea has become more alarming. The French elections have looked tighter and global investors have cut more risk from their portfolios. When it was around 109 yen to the dollar last week, analysts who had previously been confident in 118 level by midsummer began seeing the yen's way up towards 105 and beyond. After a weekend to merge Japan's run for the basement recommendation with predictions that Pyongyang may test a missile or nuclear device on Tuesday, Tokyo stocks, now aligned in a way that mean both exporters and financials like a weaker yen, rallied strongly on Monday as the yen zipped down to the 110 zone against the US dollar. Fair enough, argued traders. The news from the first round of the French presidential election was sufficiently benign to push images of Northeast Asian Armageddon to the back of everyone's mind. When those nightmares return, as Monday's yen buying at 110 suggests they quickly will, markets face a real dilemma. On the one hand, there is the yen bull case that, where North Korea is concerned, any escalation on the spectrum between jaw and war will be a risk-off, yen-positive event, even if Japan is itself attacked. After all, the analysts remind us, the yen surged after 2011 tsunami. Another argument, though, is that the term tail risk doesn't adequately capture the kind of geopolitical breakdown implied here, and whether a currency can still be described as a safe haven when it sits inside the potential sphere of crisis.